Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Sunday, December the 26th, the year's 2021. Let's talk trading. Weekly open and gap. As always, these videos are for educational purposes only. Your results may differ from mine. It's the day after Christmas. I hope everybody had a nice holiday, whether or not you celebrate Christmas. Just hope you had a pleasant day. So let's take a look and see what's going on in the market. Well, so far, the pound's moving up. We're 22 pips above the open, 3 off the high and 27 off the low. And as you can see, we filled that gap on the pound, and we've got 1, 2, 3, 4, 5 gaps that haven't filled. So if you're a weekly open gap fill trader, you like to try it, there's still opportunities to take those trades. Now, last week, as you can see, we had a pretty big range. I was thinking because of the holidays, maybe things would slow down. So, what to look for this week? I don't know. We'll just have to see what happens. One thing to notice is prices in the upper wick zone of the previous week. So, that being the case, look for a long trigger at 134.37 and a short at the close of last week, which was 134.03. We're putting in the opening range for the week. You can see we're above the opening range for the month and still below the opening range for the year. Speaking of the year, we are 230 pips below the yearly open. Now, what would be really interesting is whether or not the pound goes back to the yearly open. This last week, anything could happen. And there's no reason why it couldn't. But we'll just have to wait and see. One thing to notice, though, is right here, this low of 2 months ago, 134.33. We've got a high of 134.37. So that imbalance has been taken out, which could imply price could come around and head back towards that yearly low. But we'll just have to trade what we see. And one thing I see is that we are in the inside bar from the previous session. So one bar ago, we had an inside bar. Now, if you look at the monthly, you can see we're still below the inside bar of the month, but we're above the inside bar of 6 weeks ago. And here's the high of that weekly inside bar. So there's some more lines, horizontal lines, we can look for price to move across. And since Friday was pretty much a no day, you can see all these inside bar are just, across the pairs, they're just lighting up. So look for a long at 34.19. Look for a short at 33.79. Range still, right after the holiday, not much range, and we're only 5 hours into the trading day, so still nothing much happening there. And I guess on Friday we left off looking at the 1 minute chart, looking at how price crosses through the buy zone, because there's always the naysayers who like to say how you can get whipsawed. Well, obviously here that didn't happen. So those buy zone trades would have paid off. I'm thinking I might need to update the TRO buy zone indicator right here, because in most of the indicators I now show how far price is away from these different horizontal lines. So I'm thinking that might be nice to have, and then we could also have it on the opens too. Rat zone, not enough range, range too low. Pivot, it says near R1, bias is short, near the pivot, bias is short. We've got a lot of these pivots all on top of each other. Though the weekly pivot for this week is down at 133.38. So we've already taken out the daily. You can see once again the weekly, we're 73 pips above it at the moment. And as far as the monthly, we've already taken that pivot out. Wick zones, we're in and out of the upper and lower, but because there was pretty much, there was a doji on Friday, it's just almost all wick zone. There's hardly any candle body at all. And as I had mentioned before about the ranges, this is where things get interesting. Last week's range, 264 pips in the 83 percentile over the last 12 weeks, though. That's just one thing. We're only looking at basically 3 months worth of data there. So, because we want to know pretty much what's going on recently, and a lot of things, we have quarters and months, so we're looking at basically the last quarter. Maybe I should change that to 13, then it would be a rolling type of rolling quarter. And as I noted earlier, we are in the upper wick zone here of the previous week. So look for price to break out of that, probably by at least 100 pips one way or the other. And we'll just have to wait and see what transpires this week. You can see here on the sweet spots, gold with the wall mall lines and the previous H1 high low. There just really hasn't been that much action, pretty much just moving up here. We had gapped down, so we had to fill that gap. There's the Friday close. We had the open here on that first hour. So most of the triggers were setting up for a long. And looking at the highest low, lowest high. In fact, I think what we could do here, let's just scroll backwards. So for the monthly, you can see we are coming off the highest low. For the weekly, we came through the lowest high. On the daily, the last line crossed was the lowest high there. On H4, you can see we are above the highest low, so maybe look to short at 34.02 unless we put in a higher low. On H1, we are pretty much right at the highest low right here. Actually, we're 0.3 below it, so there's a possible short off of H1. M30, highest low. The M15 highest low. The M5 highest low. And finally, the M1. So you can see just going through the different chart periods, you can see how you can trade the highest low, lowest high profitably. Of course, does it work every time? Of course not. That's why we have stop losses. I'm trying to remember. I don't think there was any questions, though. I was looking at another forum, or actually, it was something that came in my email, I believe. And they were talking about using PSAR and a moving average and a MACD and then some other lower trend oscillator. They said, when all these things line up, and I was looking at it saying, is there anything I can use there? And then basically I was just looking at the lowest high, highest low, or turn trades off of the bottom. And I just don't see that these things beat it. They just don't seem to beat it. And so once you learn how to see these things without the indicators, I mean, you can look at somebody else's chart and you can see the oscillators. And I look here, well, hey, there's a turn trade down off the bottom, and there's a turn trade off the bottom. And hey, look at right here. There's like the lowest high right here. It's like, oh, price went through the lowest high. I just don't know why people like to make things difficult or fancy, and use these indicators that, go through all these calculations and parabolic, stop and reverse or whatever. I just don't know, when it just seems like, open, close, high, low, midpoint. You can use the pivot and just trade using those, because as I've stated, repeatedly, once you put a trade on, like if I were to go short right here, nothing matters. None of this matters. All that matters is once I'm in the trade, now I have to manage the risk. If price is moving against me, make sure I don't lose any more than I'm willing to lose on the trade. Or if the market smiles upon me and puts me in a profit area, gives me an opportunity to take profit, I take that profit before the market takes it back. And that's pretty much it. And that's probably the hardest thing for traders to, I guess, accept, realize, appreciate, put into their consciousness, put into their psyche, because they're almost always looking to do something more, add something. And, as we've spoken about it before, the key to brilliance is not adding. It's, it's when you can't take anything else away. When it's that simple, it's like, nope, I can't take it. All you have left are the essentials. What is it? Elon Musk talks about, what is it? First principles, I think. And in trading, as we've mentioned, repeatedly, you've got, your head in the game, you've got your money in the game, and you've got, your method. And so you have to manage your money. Some people say, don't lose money. That's the most important thing. You have to keep your head in the game so you don't do any of the FOMO or any of those other, brain tilt type of things. And then you just follow a method and just make sure your method's simple. And if the method doesn't work after, a month or so, and but you're making sure you're following the method and not messing up, well, then maybe you either make some modifications, either minor or major, or you find a new method. And that's about it. So, fellow traders, when you sit down at your trading platform, always remember, never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.